Hello fellow traders, my name is Jake here at StratGeeks. We have another educational video for you today about ORS Fusion, our primary automated strategy for trading the futures markets. Without further ado, let's get going on that video.
What's going on, everybody? Jake from StratGeeks coming at you again with another video on money management, specifically in regards to the Ryan Jones fixed ratio scaling method. So let's get started. We're also going to be talking about the Monte Carlo method. I want to let you know how I came up with these random numbers and what Monte Carlo is. So let's get started with, let's see. So if you folks have not seen this video yet, I highly encourage you to watch this video before, go back and watch Money Management Fixed Ratio Scaling with ORS Fusion on our YouTube channel before you watch this video. So the first thing I would like to explain is how we got the data. That's what this video does, but I'll just recap it real quick for the purposes of this video. So over here in our ticks column, these are the ticks made or lost on every single day that was traded in a 90-day calendar period with ORS Fusion on the Jake's SR 3-minute MNQ small opening range template with a maximum opening range expanded to 300 ticks. And we can see here, I actually have this pulled up. So if you go to the previous video, Money Management Fixed Ratio Scaling with ORS Fusion, you will see this section of the video here at minute marker, what is this, 8:30, 8 minutes and 30 seconds in, where I'm literally taking the strategy performance data from our ORS Fusion trades made on the ticks made or lost per day right here in this net profit column, and extrapolating it by hand into our fixed ratio money management spreadsheet. So I'll just give you a little sample of what that looks like here. So we're taking these numbers and we're placing them over here. Bam, 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 bam. So on, so on, so on. Okay, so we can get rid of this video now. Let's get that over here. Okay. So the first thing I want to talk about in this video is the Monte Carlo method. What's that, you might ask? Monte Carlo method is a way of, simply put, it's a fancy term for randomizing something, randomizing a sequence. So we can see here that our natural sequence, if you will, of our 90-day backtest with ORS Fusion was this sequence here. The first day was 115 ticks, second day was 45, so on, so on, so on. Now, we're trying to create an alternate universe to see what would happen with, especially in regards to fixed ratio money management. What would happen if these days did not actually produce the ticks positive or minus in this natural sequence. So we want to see how things would play out with, multiple different, let's see how many lost days would stack up in different scenarios, how many win days would stack up, that kind of stuff. So over here on this spreadsheet, I have the Monte Carlo area. So this whole area here, this is going to be the random number generator column. This is going to be the random control. So we'll just take our natural sequence, and then we just paste that over here. And there we go. No, we don't need that last 56 there. So 115 to 56, 115 minus 56. Great. Okay, so we're going to take this control group here, the natural sequence, and then we want to get it randomized over here. So the first thing we need to do is get Excel to give us some random numbers. So we can do that by equal sign, RAND, parenthetical that way, press enter. There's our first random number. Now we're going to just highlight that block there, drag it down. Now we have a whole sequence of random numbers in a random sequence. So let's take our random control field, copy, place that over here. Now that's going to rearrange these two columns are linked. They will be too on your spreadsheet. So the whole idea here is to randomize this 115 to 56. So let's highlight column S and T from this area here on line, what is this? Line 11. Line 11. Line 12. So we're gonna highlight all of this. Right click, sort, custom sort, and we want to sort S by T. So sort by T, click OK. Now these numbers have been completely randomized. So now we have an unnatural or alternate sequence of trading day P&Ls, if you will, but you know, our metric is ticks right now. So let's copy this random sequence and place it over here on our ticks column. Before we do the Ryan Jones method, let's put 100,000 in there so we don't scale up or down. And we are starting, this happens to be starting with 4 contracts. So with 4 contracts, we end up with 9,030, and we have all these win days in a row. We have a loss day. We got these 3 loss days in a row. These 3 loss days in a row, or 2 loss days in a row, rather. 2 loss days in a row here. Now let's get another. This is, again, this is without the Ryan Jones fixed ratio scaling method. We're just going to do a few different random controls. So let's get another random sequence going. So we saw that we're 9,000 here. We had our maximum loss days in a row with this sequence was 3 loss days in a row. So let's click on the first number here and then drag down. That's going to give us a whole bunch of new random numbers. Then we're going to highlight S and T from here. This whole block, right click, sort, custom sort. We're sorting by T. There it is. Okay. So now we have a whole brand new sequence. Copy this whole column, place it over here, and our ticks made or lost. And we still have, you know, this is not surprising. This should be the same amount. We're not using a scale method right now. And we just do that by putting a giant number up here, basically. So with 4 contracts on each of these days, no scaling, 4 micros. Got the same total here, but let's see if we have any. So now we only have 2 lost days in a row. 2 lost days in a row, a bunch of win days in a row. Let's do one more. Click the top number here, drag it down from the little box. It's going to give us a whole brand new sequence. Copy, highlight S and T, bring that all the way down. Excuse me, right click, sort, custom sort, sorting by T. Okay. Now I got a brand new sequence. Copy that field. Place it over here. Still the same amount, 9,030 rather. 2 lost days in a row, 2 lost days in a row, 2 lost days in a row, lots of win days in a row. So, you know, that's 3 different Monte Carlos, and the most we saw was 3 days in a row. Let's do one last one. Highlight. Oops. Highlight. You got to get right on that little box. So see how the plus sign appears? Or there's a plus sign, and then there's the black plus sign. Get that to appear. Drag down. Highlight both fields again. Right click. Sort. Custom sort. T. OK. Okay, so this is the last one we'll do. Copy. And Control V. And now we still have 2 lost days in a row. So we got one of those Monte Carlos. We had 3 days of losses in a row. And then it's cool to look down here at the equity curve too. So we can see in 10 days we made and we lost and we made and we lost, and then we start climbing up. And then we start losing a little bit, and then we climb up a little bit here. We can actually just push Control Z a few times, and we can see our different Monte Carlo analysis without so much clicking. So this particular analysis, we start with a bang. The next one, this one starts by some ups and downs, but eventually does climb up. This one starts with a serious bang. So this is just different ways to look at how the sequence of days might have played out. Same exact amount of ticks made or lost per day, and that's all taken literally from NinjaTrader's backtest, which is, with our system, with ORS Fusion, the backtest is spot on, because we're using limit orders, not market orders. And I mentioned in the previous video, there has yet to be a day in my, I mean, maybe there was, but I'll just say, like, there has not been a day where we have traded live with our automated system, then went back after the trading day was over, clicked backtest, and not seen those exact same trades match up with the live trades. So there is nothing to suggest that our 90 days worth of calendar days worth of historical data, backtest data, would not be accurate.